Welcome to this Q1 2025 webinar. My name is Henrik Andersson, and I'm the founder and CIO of Apollo Crypto. Today, I'm joined by Pratik, who's head of research. Hi, Pratik.
Henrik, good to be here.
Apollo Crypto is an award-winning crypto asset management manager headquartered in Melbourne, Australia. And we have over 7 years of track record. And today we manage and advise 3 funds, and we're open to accredited and wholesale investors. A quick reminder that today's presentation is not financial advice, and you should consult your financial advisor regarding your personal investment decisions. And at the end of this webinar, we will have a Q&A. So please put your questions in the chat, and we will try to answer any questions at the end of the webinar. Okay, let's get started. First, a disclaimer, again, not financial advice. Past performance is not a reliable indicator of future performance. All right, today's agenda. First, we'll start with a recap of Q1. A lot of things happened. We'll talk about the market or funds. We'll talk about the regulatory hurdles that have been eliminated. And we'll talk about TradFi, traditional finance, and how they are accelerating crypto integration. And then we'll give a bit of an outlook regarding the macro environment, crypto outlook, and also how we are positioning our portfolios. And again, we'll end with a Q&A. So please, again, a reminder to put your questions in the chat. All right, so high level regarding the market. This is a 1-year view where some assets, Bitcoin, Ethereum, S&P 500, NASDAQ. As you can see, we had a big upswing at the time of the US election in November. And over a 1-year perspective, Bitcoin has actually outperformed major asset classes like equities, the S&P 500. But we can also see there is a big dispersion, and I think the key word for this slide, for this picture, is dispersion. It's really important, and maybe more important than ever, that you're invested in the right assets and not blanket across crypto assets. So the job as an active manager, I think, is more important than ever before. All right. So as I mentioned, at Apollo Crypto, we manage and advise 3 funds. The Apollo Crypto Fund is our longest running fund. We have over 7 years of track record now. It's an Australian unit trust. It's diversified, but it's also concentrated in what we believe will be the winners in the crypto asset space going forward. The vast majority of the fund is in liquid tokens, with some upside in some early stage deals we've done. And as you can see, we have been outperforming in our 7 years. And this fund is really designed to be your one vehicle for your crypto exposure. So this contains anything from Bitcoin to some of the smaller assets in the space that we believe will be the winners. All right, Apollo Crypto Frontier Fund. It's a fund that we advise that are based in Cayman. It's a US dollar denominated fund. It has a higher risk than the Apollo Crypto Fund. Doesn't have any investments or allocation in Bitcoin and Ethereum. So it really has that alternative asset mix, mostly liquid tokens again, but also a portion of what we believe are quality primary or early stage deals. Because it's concentrated in alternatives, it has a higher risk profile than the Apollo Crypto Fund, but we believe it has the potential for higher upside as well. Finally, we have been running the Apollo Crypto Market Neutral Fund since 2020. We believe this is the first, what we call on-chain fund globally. So it has 4.5 years of track record now. It's very different than the other two funds. It's really a fund that achieve very steady returns. It uses many stable coins, that's crypto assets that are pegged to the US dollar, to achieve steady returns in decentralized finance. Last year it achieved 17.2% after fees, and in 2024 it has 100% positive months, and the same goes for 2025. It tends to kind of achieve consistent 1 to 2% returns per month. So we think this is a very attractive risk return. All right, I wanted to take the next slide.
Yeah, thanks, Henrik. I wanted to recap about, we've seen a lot of news around tariffs and trade wars and currency wars recently, but I wanted to still recap on all the positive things that happened to support crypto in Q1 of this year, which is, the list can go on forever on how many positive developments have happened. But here are some of the highlights that I'd like to talk about. The first one is Bitcoin has officially been blessed as a strategic reserve by the United States. If you look around, there's not many strategic reserves that the US or other countries have. The US has today a strategic petroleum reserve. They have a medical supplies reserve. They have a defense reserve. They have a grains and food reserve. And so, very, very few and critical things are actually reached the status of a strategic reserve. So it was very supportive for Bitcoin and the crypto industry broadly that the United States had blessed Bitcoin as a strategic reserve. And they intend to acquire it in a budget neutral way. Budget neutral being here, in a way that doesn't impact the taxpayer. There are many strategies to acquire that, and that is currently being discussed with within the crypto committee in the White House. So that's been a really, really big win for not only Bitcoin, but the broader crypto industry. Following on from that, about 26 states in the United States are considering a strategic crypto reserves, and other countries are also talking about it. So we've seen senators in France, Germany, and other countries talk about having Bitcoin as a defensive mechanism, as an alternate currency within their reserve portfolio. So that's been really, really supportive for Bitcoin and the broader industry as well. Now, SAB 121 was also repealed within the first 30 days of the Trump presidency. This has been fantastic as well. Again, a summary on that is, in the past, if you're a bank and you wanted to hold Bitcoin or other assets in your on your balance sheet, you needed to have an equivalent amount of bonds or debt or other sort of risk-free assets. So it was not capital efficient for any banks or anybody to actually do business in this space. That's been repealed. So now practically the entire TradFi traditional finance ecosystem can enter into this space. Two more supportive things happened in the last 2 to 3 weeks. One is the FDIC clarifying that banks can engage in crypto activities without approval. Prior to that, banks were very afraid. They didn't want to step on any regulators' toes in case they started offering products. So FDIC clarified that they don't need any approval to offer any products. And the Office of the Comptroller also rescinded all previous restrictions on banking for digital asset companies. So if you were following this space in the past, you would realize that it was very hard to get banking support for any digital asset company. So the OCC has rescinded all previous restrictions. So banking channels should open up again, and money should start flowing easily into all digital asset companies or service providers. FASB was an accounting standard again. So if you held any crypto asset on your balance sheet, you could not mark to market the gains, only the losses. So you could buy $1 million worth of Bitcoin, for example, and it could double to 2 million, but you could never mark it on your books. However, if it went down to halved to 500K, then you'd have to show the loss. So this was an accounting sort of hurdle that prevented a lot of companies and treasuries from entering into the space as well, and that's been repealed as well. So that's been really positive from a regulatory, accounting, and basically the entire the compass around supporting the ecosystem. Again, pleased to say this morning, just about 3 hours ago, the new Securities and Exchange Commission's chair has been appointed. It's a guy called Paul Atkins, and he has been in crypto over the last 5 to 8 years across, dealing with various different centralized exchanges, including the FTX bankruptcy. So he has been around crypto. He is pro crypto, and he said that it is his top priority to make creating a regulatory framework for digital assets, being his top priority. So he got sworn in. Oh, he didn't get sworn in, but he got voted in yesterday evening in the US, and likely to be sworn in soon. So that's been very positive as well for the industry. And finally, a whole bunch of ETFs are coming into the pipeline. Before this, it was only Bitcoin and Ethereum. Ethereum was not allowed to be staked. Now the staked Ethereum ETF filings are coming in, and there's a range of other products such as covered call ETFs and other crypto products that are coming into the TradFi ecosystem. So we should be able to capture a lot of the capital that is perhaps maybe afraid to log on to a crypto exchange or deal in stable coins. Well, soon we'll be able to just buy it through your regular ComSeg or NapTrade, or in the US, Schwab or Fidelity accounts. So all these regulatory hurdles have disappeared in the past 90 days. So it's been a really, really good tailwind for the entire sector moving forward from here. And yeah, another sort of short on the SEC's capitulation. So again, if you were following the space, it wouldn't be a week before you'd get up and you'd see the SEC going after another crypto company. Like I remember the past 2 years, 2.5 years, you just get up and you'll see that, okay, SEC is now going after Coinbase, or they've gone after Kraken, or they've gone after Uniswap, or they've gone after, a custodian or an exchange. Every week you just see new sort of law enforcement actions from a pretty hostile admin in the past. And this slide over here indicates all the cases that have closed in the past 30 days. So there've been more in the last 60 days. So, multi-year legal action against Coinbase closed, Robinhood closed, Uniswap action closed with no action, investigation closed with no action. Gemini, Consensus, the crypto enforcement unit of the SEC has been significantly scaled back. All the cases against Kraken, Crypto.com, Yuga Labs, and there's a ton of others that have just been dismissed. And this has all happened in the last 30 to 60 days. So again, extremely positive and a clear direction from the regulators and the administration that they want to support this space. And another great thing that we are seeing is public company treasuries seeing Bitcoin as a diversifier. This has really, really ramped up after the reversal of what I mentioned in the previous slide, the FASB accounting rules. So initially, it was only MicroStrategy that was buying Bitcoin and being the Bitcoin treasury company. But since then, we have seen a plethora of new companies come into the market. The latest has been GameStop raising $1.5 billion, purely to purchase Bitcoin. And these figures are not small. If you'll notice the numbers over here, they're pretty substantial and they're spread out geographically. So we are seeing US companies, we are seeing Japanese companies, there are French companies, and there are also, various in the European Union that are heading into this direction and buying Bitcoin as an effective portfolio diversifier, in their treasury. So over here, again, you'll see GameStop, Marathon Digital, Riot Platforms, Hut 8, Semler Scientific, Cooler Technologies, Metaplanet, which is really big in Japan, actually quite exciting because Japan is in a reasonably tough spot with, currency fluctuations and declining economies. So people are, having this product there, seeing a lot of support from Japanese investors. Tether is the largest stablecoin issuer, also buying 700 million. We're also seeing banks, the largest bank in Italy, buying Bitcoin. And in the previous quarter, sometime in December, AMP Australia also bought some Bitcoin as part of one of their portfolios. So it's a global movement that is going on across various different public companies. We are seeing public companies, private companies, countries, and also at the sovereign level, at the United States level, looking at Bitcoin as an effective diversifier. So that's really positive. And of course, it starts with Bitcoin, and because it's the easiest conceptually to understand, and then it then starts flowing into the rest of the ecosystem with some select names, which we'll talk about in the next few slides. Back to you, Henrik.
Yeah, thanks, Pratik. So yeah, really positive development in the Q1 when it comes to especially the regulatory picture. It's really 180 from the old US administration to what we're seeing today. So that's super positive. All right, we'll talk a little bit about the outlook now. We'll start with the macro outlook. Pratik, do you want to take the slide?
Yeah, so I think on top of every investor's mind at the moment was tariffs. I mean, today we saw a U-turn from Trump, which was supportive of the market. But broadly, I think the precedent has been set that we are in week one of a changing world order. I mean, a lot of people are saying that, of course, Trump has done the art of the deal and, has done really well, and we're back up into the right. But I think we need to remind ourselves that the leaders of many other countries have seen this as, borderline, perhaps hardline negotiations, bullying tactics. We've seen the PM of Singapore, Canada, UK, and other countries sort of raise concerns on how this was handled. And while we may still see, blue skies ahead, I think the sour taste has been left in the mouth of many leaders in many countries. That these tariffs, as soon as they come on, they can go off, but they can come back as well. And so a lot of people are definitely soul searching and figuring out what this means, not only today, but for the next decade or two, because of how everything unfolded in the last week or two, which was clearly extremely, extremely crazy, with tariffs being, starting from 30, then going to 50, then going to 104. And I think as of this morning, 125, and then rolled back to 10 across the world for the rest of the world as well. So it's been pretty volatile, pretty crazy. A lot of people have been on edge, and leaders. So I think it was, it's something to talk about on how tariffs affect crypto. The first thing is there's no way to tariff a decentralized technology like crypto because there's no centralized authority. Crypto lives on the internet. It's operated across a bunch of decentralized nodes. In the case of Ethereum, there's 20,000 decentralized nodes. Bitcoin has, over 50,000 full and light nodes. So there's no way to tariff it. It just floats around on the internet. So that's extremely positive. And I think a lot of people have looked in that direction saying, okay, how do these tariffs work and what are my alternates? Now, tariffs have also emboldened the use of alternate currencies and modes of payment. So there were rumors, which is to be verified, but Van Eck dropped a report yesterday that Russia and China were already doing some oil deals in Bitcoin. So how do you bypass the US SWIFT system and the hold that the US has over the currency system? So people are looking at alternate currencies, but I think the recent tariff tantrum has probably is going to accelerate this move on looking at alternate currencies and modes of payment. Now, the third point is actually very interesting, sent me down a rabbit hole this morning. So if you'll see the headline at the bottom, it says JP Morgan and other big banks are flying billions of dollars worth of gold on planes. So Cult Classic is gold bars filled in Boeing 747s flying across the Atlantic from London to New York. This is exactly what happened in the last few months, as people thought that even gold would be tariffed. So getting it back would, effectively inflate your price up by at minimum 10, could be 20, 30, 50, who knows, %. So a lot of people were rushing to get physical delivery of gold and flying them across the Atlantic. And logistically, if you think about it, a bar of gold is about 400 ounces, weighs about 13 kilos. And $4 billion worth of gold is, several planes, insurance, logistics, security. There's a lot of things that go into, securing gold and moving it around. And clearly with Bitcoin, you effectively, while it's still a nascent store of value gold sort of adjacent asset, it's as simple as click, transfer, done, confirmed in 10 minutes and settled. So a lot of people are also looking at, Bitcoin as the alternate to having to rush to, transfer gold around. And again, remember, if the tariffs got very hostile, the planes could have never been boarded. Like, the border patrol and the customs could have just blocked them from flying. So Bitcoin is again one of those, Bitcoin and broader crypto as well is one of those things that are uncontrollable by any central authority or port authority or customs department. So I think a lot of people also looked at Bitcoin favorably in light of what happened recently. And as Henrik's first slide showed, Bitcoin has been relatively outperforming a lot of the traditional stocks as well as the S&P as well. So I think a lot of people are turning a corner and seeing Bitcoin for what it's supposed to be. And
Yeah,
again,
that's quite amazing. I think Bitcoin has outperformed S&P 500 since the tariffs were announced last week, which I think shows the power of crypto. You cannot tariff crypto, and it's non-governmental, right?
Yeah. I think I'm on some traditional finance chat channels, and a lot of them were very surprised on the strength of Bitcoin. So definitely, it's being talked about on with asset allocators and traders around the world. So it's really positive. And now also, I think the current news. Oh, previous slide. Sorry, Henrik again. And I think the current news is also talking about a potential currency peg, the Chinese yuan being tested on the upper limit. And just to remind again, there's 180 freely floating currencies globally today. And if you look at the historical run rate of a currency, on average, most fiat currencies collapsed in 35 years, either through debasement or rapid inflation. The 35 years is the average age of a currency. Eventually, things happen which force it to collapse and go to zero. And so Bitcoin, again, has been around for many, many years and is the alternate deeply liquid pristine collateral that a lot of people are looking at and has been increasingly accepted globally, which is fantastic. And then, of course, stablecoin growth and issuance were at all-time high, and it benefits the rest of the ecosystem because, again, Bitcoin is just Bitcoin. But when you want to start moving other things like tokenized treasury bills or stablecoins, you need chains like Ethereum and Solana to actually execute that. So we think there'll be a lot of demand for those assets as well in the next few years. Yeah. And then if I'll talk about the debt train, a lot of people think that Doge and rolling back all of these, the huge debt load of the US and the rest of the world is going to be easy. The US may or may not be successful. It is going to be quite difficult to do that, but let's be optimistic. Maybe they'll get it done. But what about the rest of the world? I mean, the European Union, Japan, Canada, Australia, UK are enormously, China including, is enormously indebted. And, it's very hard to roll back all this debt without severe austerity measures. And maybe people will do austerity, but the likely outcome, as history has shown us over and over again, is likely currency debasement. So even with all these tariffs and stuff, a lot of economies are going to be in turmoil. A lot of industries, factories are going to be spun up in various geographies or shut down. So the idea is eventually this debt has to be paid back, and the only way to pay that back is through increased taxation or austerity, and or through currency debasement. And usually it's been a mix of those, but typically currency debasement always almost certainly happens. So and this is a global phenomenon. So Bitcoin effectively is a credit default swap on the entire financial system. Credit default swap, for people that don't know, the product is effectively an insurance policy on something crashing. So when there's 180 different currencies, so many economies with so much debt, you can be sure that in the next 5 to 10 years, some of them are going to have turmoil, especially in light of the recent events. So, Bitcoin and crypto will be an exit ramp for them to potentially get out. And networks that facilitate stablecoins, real-world assets, DeFi are obviously not prone to central control authority. So a lot of people are leaning into that space as well. And not only at the sovereign level, but also citizens. Citizens are going to seek alternates when stressed. I'm sure a lot of people in various parts of the world were looking at how do I potentially protect my wealth in an easy way in case this goes on further and our currencies devalue significantly. Again, in the past, Chinese yuan has devalued 20% practically pretty quickly. Like the central government would decide that they want to devalue it, they fix it at a different rate, and then it gets devalued. So this happens across the world and can happen again. So Bitcoin, crypto, stable coins, and the entire Web3 ecosystem is one of the best and easiest on-ramps for anybody globally to escape any of those things. Yeah.
All right. So moving on to crypto narratives, I think we'll talk about three big narratives in the crypto space. And so that's kind of the light where we see the portfolios as well, and where we're getting allocation and exposure in our portfolios. The first one is Bitcoin. We talked a lot about Bitcoin today, but it is on a path to become viewed as a digital gold. It's not there yet, but it's, as Pratik talked about, non-governmental, which I think is more important than ever. So this is like a deeply liquid non-government asset, and that's what the wall is looking to now. In the graph here, you can see the market cap of gold. That's the top curve here on this graph. The market cap of gold is around $20 trillion. And the green line in the bottom is the market cap of gold. So it has a lot of catch up to do to gold still. At 100,000 US dollar, Bitcoin's market cap is around $2 trillion. So we need a 10x in Bitcoin to reach the market cap of gold. So that's kind of how participants are looking at Bitcoin in terms of gold and alternative, more modern type of a store of value, which is Bitcoin. So this is the first narrative, and I think that's just getting stronger and stronger. Second narrative is the first big product market fit or use case of crypto, apart from Bitcoin as a digital gold, and that's stablecoins. So stablecoins, as I mentioned before, are these crypto tokens that are pegged to the US dollar. And if you look at the total value of all outstanding stablecoins, it just reached a new all-time high, almost $250 billion earlier this year. So despite kind of the altcoin market being fairly weak and a lot of assets outside Bitcoin doing not that great, stablecoins has continued to grow, and it's just a better payment globally. So you can send stablecoins to anyone in the world instantly, almost for free. So more important people and companies and financial institutions are realize kind of this new payment rail, which is stablecoins. We'll most likely have a new stablecoin bill out of the US as well. So you will have real regulation around this payment rail. And I think that will just continue to kind of fuel this growth. We are seeing much more new participants in this space as well. Last year, PayPal launched their stablecoin. Fidelity and others are about to launch stablecoins as well. And you can ask, like, how is this good for us and our investments? Like, stablecoins are pegged to the US dollar, so how do you make money? And we'll get into that as well. But basically, they run on crypto networks. They are used in DeFi, and they are decentralized network. They are issuing stablecoins. So that's where we're getting our exposure and where we see a lot of upside in our portfolio. All right, and I think the third and final narrative that we'll talk about today, which is super exciting, is the tokenization of real-world assets. So I have a quote here from Larry Fink, who's the chairman and CEO of BlackRock. He wrote this in the latest chairman letter just a few weeks ago, and he said, "Every stock, every bond, every fund, every asset can be tokenized. If they are, it will revolutionize investing. So BlackRock is the biggest financial institution in the world, and they are seeing the promise in tokenization of real world assets. BlackRock itself have tokenized one of the funds on the Ethereum network, and we are seeing more and more assets being tokenized because they become kind of global accessible, and kind of being run on the crypto networks. You get all the benefit from blockchains, exactly like with stable coins. The graph here at the bottom is kind of the total value of real world assets on the blockchains. This excludes stable coins. So it's still around $20 billion. It's growing very quickly, still very small, but this is where the market is going. And you're getting exposure to this emerging narrative in our portfolios as well.
Yeah, if I can also briefly talk about it. This is one thing I speak to everybody. It's 2025. We have vertically landing rockets from Elon Musk and all types of great things, AI, humanoid robotics. Yet, if I simply wanted to transfer some Apple stock or CBA stock to you, it is an incredibly excruciating process. The number of paperwork, forms, transfer, chess, hints, it's pretty crazy and ridiculous how the rest of the plumbing in the financial industry is still so antiquated. It should be as simple as me wanting to send it to you and being able to send it like a WhatsApp message. And this is the big multi-trillion dollar, multi-decade opportunity that I think is here now with this new administration. So every product can be tokenized, fractionalized, and be sent seamlessly globally across the world, like a WhatsApp message. All the frictions, they shouldn't exist. It's like 1960s technology right now. The way our transfer processes work for stocks or other things, and the friction and the armies of compliance middle and back office people that are required for that. It can be completely changed and bring forth into the new century and era. And it's also extremely capital efficient, so banks and everybody else would love it. So it's not where once you buy a product, it's locked, and then when you redeem it, you redeem it then and you do your CGT and things there. Once you lock a product, you should be able to redraw loans from it pretty seamlessly. Pledge it as collateral pretty seamlessly. You should be able to do it in a minute instead of filling in 50 different pieces of paper and doing those things. So I think that's coming, and a lot of the large companies recognize it, and this is going to be a big secular trend for the next decade or more.
Yeah. So this asset can get instantly settlement on the blockchain, which is super powerful. You can one way to view this is in kind of the first 10 years we have been building out the infrastructure in crypto, all the DeFi networks, all the lending networks, all the trading applications on smart contracts have been built out, and now we're actually bringing in real value onto the blockchains that will interact with the lending markets, with the exchanges that we have built on chain. So this is bringing real value into the blockchain. So I think this is super positive for crypto at large. All right, portfolio update. Pratik, do you want to speak about this?
Yeah, so on the portfolio front, we have a refined strategy and a concentrated portfolio in really, really high conviction projects. So we had several different projects across various sectors in the past as crypto was still nascent and we didn't know what would stick, what would not. So it was good to have exposure across multiple sectors in case there was, a fantastic new product market fit that, could take off. But over time, I think we've realized that a lot of the projects are probably not going to see a product market fit, but there are a few that can easily be, the next Facebooks, Amazons, Googles, and all of that. So we think that the majority of the activity for the next few years in crypto will be on 3 chains, Bitcoin, Ethereum, and Solana. So we are focusing on those 3 chains and the verticals within them. and finding the winners across several different categories and sectors within them. Our focus at the moment is also
Pratik, as you said, is we are running a much more concentrated portfolio than ever before. And I think that will just be more and more important as we go forward. Dispersion in returns, being an active manager is super important in this market. We're unlikely to see the same trends as in previous cycles where everything performed really well. It gets much more important what you actually invest in.
Yeah, thanks, Henrik. And I think one place where we are also uniquely positioned is we are crypto native, but we also have traditional finance background. I've been in investment committees of various different traditional firms as well. And we know how they think and how they decide to allocate money. And the next big several $1 billion of inflows is going to come from them. So we think we have a unique position in understanding where that money flows and which sectors it will likely flow into, and what will be able to capture most of that value, versus going into various sectors that clearly still have many years before they can get large pools of capital allocated to them. So our focus is on liquid strategies rather than primary deals, because we see great opportunities in the liquid front at the moment, especially under this new admin. We are also generating a lot of yield on Bitcoin and a whole bunch of other assets in our portfolio through DeFi and options. We are productively using all assets. So more than 80% of our book is being productively used. None of it is just idly sitting, which is great. And we've created ways to, processes in place to ensure the maximal use of each one of those assets in our book. And then some of the top picks in our portfolio, excluding the majors such as Bitcoin, Ethereum, Solana. We like Hyperliquid. It's a clear perpetual DEX category winner. The product is stellar. We use it, I use it, and it's well loved within the entire ecosystem. And it has already captured more than 30 to 35% of all the perpetual volumes within crypto, and they have a very aggressive buyback strategy. So all the profits they used to buy back their token. So it creates a really nice support to their token value, and we see that really supported to the upside. Aave again has withstood the test of time. It is the largest borrowing lending protocol, and it is integrating with traditional finance on the horizon as well. They also have changed their tokenomics and are aggressively buying back their own token and putting in place better risk management and parameters to ensure growth for the next few $1 billion expected from traditional finance coming into the space. Athena is another name. It's a battle-tested and unique product with deep decentralized finance integrations within crypto. And recently, they have also announced they're going to integrate with traditional finance. So, and a simple analogy there is today your money is probably sitting in a bank account earning 4%, or in treasury bills earning 4%. If you are in our market neutral fund, you can earn 15 to 22%. But Athena is effectively trying to offer a stable coin to the rest of the traditional finance ecosystem to be able to get the yield within the crypto ecosystem, which is typically higher than your treasury bills. In crypto, typically you can get in a risk-free way 8 to 12%, and if you're really good, 16 to 20%. So Athena is trying to offer a KYC compliant product to institutions to be able to get access to that yield. So that's positive as more money comes into the ecosystem. And Sky, previously called Maker, it's also the largest on-chain stablecoin issuer. It has really strong earnings, and it also has a very strong buyback program going on. So creates a nice support to the price.
Okay, fantastic. Yeah, all those picks that you talked about, Pratik, have really strong revenues, and some of them are returning some of that revenue to token holders as well. So that's becoming more and more important. So I think that ends the presentation part of the webinar. So let's see if there are any questions. So we have one question from an anonymous attendee. how much of the main fund is roughly held in Bitcoin, ETH, and Solana? So yeah, I'm happy to answer that. So we actually have less ETH right now than I think we've ever had in the portfolio. ETH has underperformed. Still, ETH will be important for two of the three narratives we talked about: real-world asset tokenization and stablecoins. That's mostly happening on ETH, but the narrative around ETH is not favorable at the moment. The transaction fees on ETH are very low at the moment. Once kind of the revenue start going up on Ethereum network again, I think it's time to reallocate into ETH again. So the current position in ETH around 5%, Bitcoin around 45%. And again, we are generating yield on that, so that's not a passive allocation. We're generating yield in Bitcoin through DeFi and through options, like Pratik mentioned. Solana is a similar position to ETH in the main fund, around 5%. Right.
I can take the next one as well.
Yeah.
I think there is an anonymous attendee that is an investor in ACF, and they mentioned that the portfolio is down relative to holding Bitcoin. That's been a challenge for practically all liquid funds out there. Bitcoin in this cycle has definitely outperformed most of the alternate coins, and the reason why was a mix of having those ETFs out pretty quickly and seeing billions of dollars of traditional finance flows, followed by having a range of hostile regulatory environment for the rest of the alternate ecosystem. So Bitcoin has been pretty difficult to outperform for almost, I would say, I look at other funds as well, practically all of them. I think there might have only been one or two that have outperformed Bitcoin. So it has been a tough period to outperform Bitcoin, but with the new positive developments within crypto, we think there are pockets of opportunities within alts. That's why we're running a very concentrated portfolio at the moment. And we hope that would be able to then outperform Bitcoin as risk comes back into the market.
Great. Yeah, so you answered a question about gold as well, Pratik.
Yeah.
So I think it's fair to say Bitcoin is not digital gold yet, but it's on the way to become that. It's still much smaller than the gold market, for example.
People talk about the great wealth transfer. It's expected that several $100 trillion of wealth is going to be passed on to the newer generation over the next decade, and they're 100%. You can ask if you've got nephews, nieces, children, they would be more interested in buying Bitcoin or crypto than a physical gold bar. So I think that generational shift is also coming, and when that comes, we'll see more allocation towards Bitcoin, and that digital gold narrative cement itself.
Cool. Maybe if there are no more questions, still have a few more minutes. If you have any questions, put them in the chat. But otherwise, I think the summary of Q1, really positive regulatory developments in the crypto space, which should be really positive long term. There are some strong narratives in the crypto space, like Bitcoin digital gold, like the stable coins and what's happening there, real world asset, bringing real value onto blockchain. In the short term, there will be a lot of volatility. We know that with the Trump administration. But I think that creates opportunities as well for an active manager. And the other point is that this is probably the time for active management in crypto. I think we'll see more dispersion when it comes to returns going forward. We cannot expect the old cycles where old coins widely performed really well. Really important what assets you invest in, networks with really strong revenues, buybacks, etc. I don't think we will see the old type of cycles we've seen in the past, and that's probably a good thing. crypto is finally maturing, and we have some one of the biggest financial institutions in the world starting to interact and incorporating crypto. All right, I think we got a few more questions. So let's try to tackle that as well. Yeah, so the first one is about alt seasons. Do you see that happening this cycle? I'm not too sure we all see that. As I said, we don't expect that. That's why we're running a super concentrated portfolio in what we believe are the winners. And I don't think we can assume that we'll see an alt season. We'll see some assets performing really well, not just Bitcoin, but we not see kind of this broad kind of rally in altcoins. There are millions of coins today. It's unreasonable to think that, majority of them will, go into something we can call an alt cycle. What's your view on BTC price by the end of the year? That's a tough one. I've said that I think we'll see BTC at 150, 200,000. I've talked about in this cycle. Again, I'm not sure where we'll see these kind of cycles anymore. But I think that's still on the cards potentially by the end of this year. But again, this is not financial advice. Pratik, what's your view on BTC?
Yeah, I think we are forming a very, very nice base over here. So $75,000 of Bitcoin was defended despite all the tariff news, coming back and forth, and despite outflows from ETFs and other places. So people are seeing value at roughly 75K Bitcoin. Personally, if we see, the Xi Jinping and Trump talk during a negotiation in the future, and it ends up like the Zelensky moment, then yeah, we could probably dip back down to, higher 60s. But I think on a risk reward basis, your downside is pretty capped on Bitcoin at the moment, and the upside is, the sky's the limit on the upside, as other countries and other people sort of catch on to Bitcoin being what it is. So I think we're in a good space now. Of course, nobody has a crystal ball, but seeing the flows, seeing how Bitcoin has been relatively stronger compared to equities, a lot of stocks, a lot of indices, people are seeing that. And I know from a fact that a lot of the asset allocators and traders around the world are talking about how well Bitcoin has performed relative to other assets in this turmoil. So yeah, no real price, but the base is forming. The base is pretty strong, I think, somewhere around here. And of course, we can take another dip, but it's looking pretty good from here. And then I can take the next one as well. Do you see much interest to settle RWA equities on Solana versus Ethereum? I think they're both different tech stacks. Ethereum is broadly the most decentralized blockchain out there, and it has a very strong developer tooling stack. And Solana is a different vertical, which is cheap and fast. I think we are going to see RWAs and equities on both chains. Most of the issuers are going to be agnostic. They'll just say, we'll issue on both chains, and it's a matter of technical competence, because EVM ecosystem and tooling is far better than Solana. So settling on either is going to be completely fine. Ethereum also has a bunch of L2s, layer 2s. So they could just, use a layer 2 and then settle onto the mainnet, and then or main on Solana. But we don't see there's a specific winner per se on settlement on Ethereum or Solana, because most issuers are going to be indifferent unless speed is of importance. If speed is of the importance, then they'll probably go to Solana, but don't think we're going to be doing high frequency trading on blockchains anytime soon.
All right, I think that concludes the Q1 webinar. Thank you everyone who participated, everyone who asked questions, and we'll see you and talk to you soon again.
Thanks, guys.
Thank you.